Did you think that this battle was over? We may be in a new year, but it does not mean that we've stopped battling with old flames. From all indications, it is not yet over. But what's this battle that we're talking about? It is the battle against cryptocurrencies by the US government and regulatory agencies. 2024 already seems like an apprehensive year for crypto. One of the jolts of fear crypto investors experienced last year was when Johan van Overveld, a member of the European Parliament and former Minister of Finance of Belgium, called for a strict ban on crypto as a result of banking crises. In a March 17, 2023 tweet, Overveld suggested that lawmakers should consider banning cryptocurrencies as a lesson from the collapses of Silicon Valley Bank, Signature Bank, and Silvergate Bank in the United States, referring to digital assets as a speculative poison. At the time, members of the European Parliament have been discussing the impact of the failure of these banks on markets and its jurisdiction. If a government bans drugs, it should also ban cryptos, Overveld said. For a long time, the heated debate around cryptocurrency, most notably Bitcoin, the largest digital currency by market capitalization, has equally created an intense debate among some of the most prominent names in the financial world. While some have gone as far as to call the cryptocurrency investors stupid and Bitcoin a fraud, others are funneling their wealth into the high-flying currencies, betting on vehicles like Bitcoin, Ethereum, and Ripple as future payments. One of the most popular Bitcoin critics is billionaire investor Warren Buffett, who has appeared in several interviews to take a stand against cryptocurrency. In an interview with CNBC, he offered his outlook on the volatile cryptocurrency market. In terms of cryptocurrencies generally, I can say with almost certainty that they will come to a bad end, he said. While Buffett suggested that it was not yet clear when or how the inevitable crash would occur, he said, "If I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I'll never short a dime's worth." He reiterated that his company, Berkshire Hathaway, does not own any cryptocurrency, does not short any, and will never have a position in it. With this, he added, "I get into enough trouble with things I think I know something about. Why in the world should I take a long or short position in something that I don't know anything about?" In the same way, JP Morgan's Chase CEO Jamie Dimon expressed his opposition to cryptocurrencies and Bitcoin at a Senate hearing. He has been making public comments about crypto since at least 2014. While he has made seemingly contrasting statements over the years, his general thesis has been unwavering. It's a terrible store of value. It can be replicated over and over. It doesn't have the standing of a government, he told CNBC in an interview in 2014. In September of 2017, Dimon called Bitcoin a fraud, going as far as to labeling it worse than tulip bulbs, a reference to the tulip mania or the tulip bulb market bubble. "I'd fire them in a second, for 2 reasons. It's against our rules and they're stupid. And both are dangerous," a crypto news platform Bloomberg reported Dimon saying of any JP Morgan trader trading Bitcoin. Now, is it safe to ask whether crypto's end is imminent? Will 2024 see the downfall of cryptocurrency? Well, crypto has been noted with a slew of disasters which have been difficult to bear. In 2022, one of the biggest shocks to the cryptocurrency market was the collapse of trading giant FTX. The firm filed for bankruptcy in November, despite having been valued at $32 billion in February. The company's founder, Sam Bankman-Fried, now has a devastating prison sentence ahead of him. Another challenge that bedeviled the cryptocurrency market was crypto broker Genesis filing for bankruptcy protection. The filing came shortly after it was revealed the firm owed over $3 billion to creditors, and his parent company, Digital Currency Group, was looking to sell assets in its portfolio to support said company. Other companies that felt the effects of the crypto winter are 3 Arrows Capital, Terra Network, Voyager Digital, BlockFi, and many others. Then there are the collapses of stablecoins Luna and Terra USD earlier in 2022. When the crypto winter became intense, there were various media reports, but it seemed like users were not as worried as bankruptcies and price drops suggested. Amplitude, a digital analytics platform, found that the overall crypto usage grew by 25.8% since 2021. The finding came from Amplitude's 2022 product report, which also found activity peaked at a 78% growth in January of 2022. It added that the growth levels were higher than fintech and that the dip in the market didn't equal a decline in users. Perhaps the crypto winter even birthed a resilient set of investors as well. It is worth noting that crypto winters have happened many times in the life cycle of cryptocurrency, each hailing the end of the digital currency, but that does not happen. A good example is the dip in Bitcoin prices in 2017, when its price dropped by 45% from its peak. The currency went to new heights. In 2022, Bitcoin lost 60% of its value. However, the currency went on to rise, with the price rising from $16,000 at the start of January 2022 to nearly $44,000 at the end of 2023. Cryptocurrency is never going to fade to black. Many factors cause the fluctuating price of cryptocurrencies. There are a lack of regulation, high profile of bad actors, slow transactions, high energy consumption, oversaturated markets, and more. An expert once said, as crypto is still away from full maturity, there will be several such periods of highs and lows that crypto will go through. The current movement in crypto is only a learning curve, and it will be crucial for regulators and enterprises to work in sync to convert this opportunity. The crypto market suffered tremendously in 2022. Scandals and bankruptcies rattled several large and popular names in the space, against a backdrop of raging inflation and painful anti-inflation policies. From market darling growth stocks to overpriced real estate properties, anything risky took a massive price cut. Of course, cryptocurrencies led that race to the bottom, and many investors lost their enthusiasm for the crypto sector after price cuts. However, we survived those moments. Now let's take a brief journey back to 2013. Bitcoin was the only name in the game back then, but that was more than enough to fuel some head-spinning market action. The token was worth less than $13 per coin when it performed its first halving in November of 2012, which preordained a 50% cut in the rewards earned for mining a new Bitcoin block, scheduled to occur roughly every 4 years. The inflation-killing event inspired more people to test the waters of Bitcoin mining, and the token soon soared. Bitcoin prices rose to $130 by August of 2012, and then peaked at $1,151 in December. That was when a leading cryptocurrency exchange was hacked, popping that bubble with authority. Bitcoin retreated to roughly $180 per coin amid loud claims that the whole cryptocurrency concept was just a mirage with no real value. Another surge, peak, and crash followed in 2017, about 1 year after the next halving. This time, Bitcoin's moves led to the pricing action in thousands of newer cryptocurrencies. The trading volumes were also much higher, and the price move saw more coverage in traditional news outlets. Bitcoin prices nearly reached $20,000 per coin this time. Yet another crypto winter followed, and plenty of investors swore off cryptocurrencies forever. The old joke just wasn't funny anymore. The next halving was during the pandemic in May of 2020, and it didn't seem to do much at first, as Bitcoin prices held firm for several months at roughly $10,000. Regardless of this fact, another bull run followed in 2021, and Bitcoin's prices soared above $60,000 a couple times. Some of the same people who had given up on cryptocurrency back in 2018 took the market seriously again. Non-fungible tokens were also red hot for a while. And then you know how the rest of the story unfolded. The interesting season was followed by an inflation-inspired retreat from risky investments. The eternal death of Bitcoin, Ethereum, Dogecoin, and Cardano was announced from the rooftops. But once again, here we are today. The rumor of crypto's death has been exaggerated many times before, but the truth remains that these nifty digital currencies have game-changing implications for every corner of the financial world. The market is off to a good start in 2024 too. Furthermore, the government seems to have tamed the inflation beast at long last, and the economy may go through a recession this year, but it should come out stronger on the other side. Investors are interested in riskier growth-oriented ideas once again, including cryptocurrencies. Plus, there are several additional growth catalysts in the cards right now. No doubt, cryptocurrencies will soar again. This time, again, look for successful DeFi apps and invest in cryptocurrencies that make them tick. One of the best case scenarios for 2024 and beyond is that regulators around the world might come together on a global framework for crypto regulation. However, that looks unlikely today since the international view of crypto ranges from Bitcoin is an official currency in El Salvador and Central African Republic to crypto transactions are illegal in China. Global unity on the issue seems unlikely in the short term. Nonetheless, our gaze is fixed on a brighter side. This year might usher in greater goodies for the crypto market, so make sure you stay tuned. But that's going to do it for today's video. Make sure you click on subscribe notification buttons, and we'll see you in the next video.